Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities, and equities, well, holding onto those all-time highs. We're unable to extend them. A lot of geopolitical risks in the air. We had stronger CPI, higher inflation readings, potentially something coming out of the Fed being priced into the market. So the equity markets are kind of waiting for some clarity. Yeah, they're on the all-time high, so it's kind of hard to say you're going to be bearish on equities here, especially since we haven't had any real tangible news to really force us lower. Yeah, a weaker dollar doesn't help stocks, but certainly I think that right now the equity markets are in a wait-and-see mode. They're not going to sell off just on a whim. They'll stop going up because of some certain news like we heard out of North Korea today. And market volatility is still holding near the recent lows. We have yet to get out that 9 handle on the VIX, which has been elusive here as of late, but certainly one that we remember from earlier this year. And that suggests that volatility and fear is not part of the pricing that we're seeing in the equity markets, despite any modest pullbacks we get in the S&P or whatnot. It seems to me that right now the volatility is more a measure of steady as she goes, and there really isn't any angst about an unforeseen move in the markets. Even if it's a pullback, it'll be modest and only. So what does that leave us for the rest of the week? We do have retail sales. We do have University of Michigan coming out tomorrow. I don't anticipate those to be market-moving events. However, I do see the pre-weekend / pre-FOMC trade keeping equities from extending those gains much higher than they already are. And I think it all becomes about the Fed. It becomes a waiting game. They're going to talk about their balance sheet next week. They're going to talk about forward guidance next week. And I think those are the things that the market is really looking for and gearing towards, and whether they get that clarity, because one rate hike isn't really going to cause the stock market to tumble. And likewise, keeping rates unchanged will help fuel those stock market higher because of the fact that there is really no other place to get the yield. That being said, the market likes clarity, and right now it doesn't have a whole lot of that clarity. So as we sit on the all-time highs with volatility near the lows, the Fed has an opportunity here to give us some clarity on where they see the market going and where they see policy moving over the next quarter. This has been Todd Colvin coming to you from the floor of the CME Group.